Hello to all traders and welcome to the final installment of the Stock Watch video for this week. This video has been brought to you by Orbex, and it seems that Wall Street is licking its wounds once again after another bad day of stock drops, as we saw Cisco plummet by 14% on missed earnings, and we've also got Target and Walmart that are continuing their slump since the middle of the week, as they are complaining about these potential disruptions in the supply chain and obviously the rising labor expenses and also this inflation cloud that's been hanging over most of the globe at the moment. But with in America especially, we're seeing it being tightened once again and again. So let's just look at some of the figures then. We saw the Dow end just under 1%, and that followed with the S&P and the tech-heavy Nasdaq just finishing 0.5 and 0.6% consecutively. So we're just looking at the prominent big players in the market. As I said, Cisco did hit a 40% lower. We will see the charts shortly. But what does this mean going forward? And what does this mean for the Fed going forward as well, as a lot of traders and investors are really pushing for Fed Chairman Jerome Powell, to start moving the rate hike even further than its planned projection. So we'll see what happens in the next few weeks when we build up to the Fed's announcement there. So we've still got Target, as I said, and Walmart really starting to move lower. And we'll just look on Cisco first of all today. Just looking on the daily charts, I just want to show the accentuation of these great prices being lost in the market. And if we pull Cisco back quite significantly, we haven't seen this drop since possibly the first wave of the pandemic, just as we're getting into the first wave being over, and moving into the second wave at the end of 2020. But these prices are very, very vastly to the downside, very, very bearish market at the moment. And we're just waiting to see what the next signals are. We're looking on the RSI at the moment to see if there's any kind of divergences to bring it up to the upside. However, it is fundamentally driven at the moment. Most of the markets, we looked at gold, we've looked at oil, we looked at the Dow Jones earlier in the week on the videos. However, these big moves in the market are very, very fundamentally driven. Missed earnings and the worry for the next 6 months for a lot of these companies because of these supply chain disruptions, inflation being at its highest in 40 years now, I believe it is. So we're not seeing any slowdown anytime soon. So this could be a very big bearish market, a very big bearish move as well. If we look onto Walmart though, this is more staggering because we are seeing more of a downside risk and prices moving lower. Now, these prices haven't been seen since possibly the start of the pandemic in March 2020. So we saw this big dip in prices, then we saw the accentuation. Choppy market since then because we've seen Walmart being the world's biggest company by revenue and also by employees as well. So potentially it was supposed to be getting better and better. However, almost a 52% drop in Walmart's share price in just a matter of a few days has seen something we haven't seen before in a while. So if we're monitoring this at the moment, trying to get some opportunities, we're just looking now that if we do not get any signs of covering these gaps in the market, then we could be looking at further downside, and the risk to that is very monumental, as this could actually keep pushing lower and lower in the near term as well. So we'll see what happens in the near term for Walmart. And just lastly, just wanted to look on Target as well. Moving in tandem with Walmart as well, we are looking at the moment that we will start seeing moves to the upside. However, we're just waiting to find that support. If we move on the way out for Target as well, as I said, mostly similar to Walmart. We haven't seen these prices since the start of the pandemic, moving into the middle of the pandemic, and it's just looking very, very bearish at the moment. We are hoping that this turns into some sort of bullish divergence. However, as you can see here, prices are moving in tandem. So it will literally be fundamentally driven. If we can find some support, if bulls get back into the market, we can start covering this gap here. I'll just zoom it in for a little bit more clarification. We can start moving and start covering this gap. It's not a runaway gap, at least at the moment. Runaway gaps is when we break and then we start just moving away, a little bit like what we saw on Walmart. However, at the moment, we are looking like prices are on the downside. However, if we can finish these, complete these gaps, then we can see some upside momentum and bulls can enter the market and we can put some bids in that respect. So just keep an eye on all the comings and goings. Obviously there's a big weekend ahead with a lot of news coming out for next week as well. We've got the FOMC minutes next week, which could provide some more clarification, some more clarity on where the Fed is heading, and we'll see what's in store after that. So that's all from this week's videos. Thank you very much for joining me, and we'll speak again next week. Bye for now.